Open stock was buzzing yesterday, the 2nd of January 2026. It wasn't a very big day, even though it gained, it wasn't a very big day. It gained only 4.12%. And the volume, so in that session, was around way less. Its usual 50-day average. Okay, you can see that the volume for that session was 38.445 million shares, whereas the 50-day average is usually around 102 million shares. Okay, so the company has become one of the most talked about names in trading circles as investors look ahead to a possible housing market rebound that's in the US, driven by easing interest rates and a renewed appetite for small cap tech stocks. The classic January effect, with mortgage costs in the US finally showing signs of relief. Bulls argue that even a modest recovery in transaction volumes could meaningfully lift the company's business, which relies heavily on housing market momentum and consumer confidence. At the same time, optimism has been amplified by the company's ongoing strategic pivot toward AI powered real estate operations. Supporters believe that the leadership changes and a stronger tech first identity may help the company automate pricing, streamline workflows, improve risk management, and eventually stabilize margins, something that has historically been a sore spot for the company. In bullish forums, there's been growing conviction that if AI driven efficiencies start to show up in the numbers, the market may rethink how it values the company, potentially leading to a powerful re-rating. But the enthusiasm isn't universal. A sizable group of skeptics continues to focus on what they see as a persistent selling pressure and fragile sentiment. They point to the company's uneven financial history, razor thin margins, and exposure to macro swings as reasons to question whether a durable path to long term profitability truly exists, AI or not, amongst other things. So, yes, the extrapolation is more of, if you like, a distributive contraction. A distributive contraction. So, it's expected to continue to print lower prices with volatility, okay, contracting whilst also decaying, contracting whilst printing lower prices. So the trend of the extrapolation is to the downside. Okay, so projections here are currently saying 4.94, 3.68, 2.9. Okay, so the probability of it retesting, okay, well, because in the interim, in the very short term, high prices are expected to keep playing out at least up till Tuesday, the 6th. Then after that, we may see a consolidation towards the 9th, towards the 8th of January. And then after that, the 9th, it might attempt to resume the strength, yeah, to pick up the strength it picked up yesterday, the 2nd, and maybe peak by the 13th of January. So as I was trying to say, the probability of it retesting 6.27 dollars is statistically less than 50%. Okay, but it does not mean it's not going to happen. Momentum is not extrapolating anything. Going by what we have seen, going by what happens on its order books, it's not expected that it's not it's moment it's there's moment that volatility is going to be in place. Momentum is not expected to pick up. It doesn't mean that high prices will not print. Just it's just that the way the stock, the way they trade the stock is not such that momentum might pick up. It's not such that momentum might pick up, but it doesn't mean it wouldn't. So it doesn't mean that high prices wouldn't print. On the 4 hour chart, it's what we have here is consolidation towards the pre-market session of Monday the 5th, and then after that, they might attempt to expand towards the close of Tuesday's trading session. So it's indicating that it may have 2 days of high prices, 5th and 6th, and then after that, the downtrend may resume thereafter. Okay. On this 4 hour chart, we have 5.95, 5.63, 5.43, and then upper projections of 6.36, 6.64, 6.81. Okay, so yeah, momentum equally pretty much flat as well. All of these are derived from its order books. The way it is not aggressive. The aggression is not there, not really there as such. Not really there. It's it's really really liquid. A lot of shares I would say across the tape. You can see here. Yeah, it's quite a volatile. But not such that not such that high price. I mean, volatility momentum is expected to really spike to the levels we saw as of late November. But in any case, it's actually expected to pick up, but not massively. It's actually expected to pick up as well, going all the way towards the 6th of January, but not exponentially as such. Okay, so see what you make of open stock, and thank you very much for watching this video.